Hey there traders, this is Steve Miley, the market chartist for FX Explained and our regular weekly MacroWatch update for the week commencing the 24th of January 2022. Inflation, interest rates and Ukrainian fears trigger risk off. So let's take a look first of all at those macroeconomic and geopolitical developments from the past week. Well, first of all, global inflationary pressures and fears of even higher interest rates have seen a more aggressive shift to a risk-off phase throughout mid-January. And these concerns have been heightened by the threat of conflict as Russia continues to amass troops on the Ukrainian border. These worries have transitioned from higher yields in global bond markets to a more aggressive sell-off in growth stocks in the US, now to the broader equity markets globally. Earnings season in the US has seen some financial sector stocks disappointing, whilst Netflix suffered a big miss on projected subscriptions into Q1 2022. Now let's take a look at the global financial market developments for last week ending the 21st of January. Well, as we've already looked at, the equity markets getting hit, led lower by the tech sector and the Nasdaq, plunging lower almost to the point seen in Q3 of last year and threatening to move towards low seen in Q2 of last year of 2021. So significant sell-off on the Nasdaq, leading the broader markets lower, and that's been assisted by an initial push higher in yields, although yields did move to lower yield territory in the US. On Thursday and Friday, we did see a significant push to higher yields, hitting the 1.90% level last week, highest levels since 2020. And the higher yield moves has seen a strengthening of the US dollar, so US dollar generally firming up against most currencies, although the dollar weakening against the yen outperforming here as a safe haven in this risk-off environment. The Australian dollar also slightly negative against the dollar in here, again within that risk-off theme. And gold more positive with the risk-on theme that we're seeing across global financial markets. Oil did move to a new high, however did step back from that high, but moved to a new multi-year high last week and continues its uptrend. And within the broader range, the copper market still positive within that wider consolidation, broader range environment. So now let's take a look at the week ahead, commencing the 24th of January 2022. Well, we're going to continue to watch the potential for military developments on the Ukrainian-Russian border and monitoring the economic impact of the Omicron variant of COVID-19. On the central bank side, we get the Bank of Canada interest rate decision statement and press conference on Wednesday, and also get the same from the FOMC later on Wednesday. On the earnings side this week, we're going to focus on IBM, Microsoft, Johnson & Johnson, Tesla, Boeing and Apple. So looking at the data, on Monday we get the global market flash PMI, going to be much in focus. Australian CPI, German IFO and US consumer confidence come on Tuesday. We get both the Bank of Canada and FOMC interest rate decision statements and press conferences on Wednesday. Thursday brings US GDP and durable goods data, whilst Friday we get German GDP, US personal consumption expenditure rounds off the week. I'm going to wish you all a great trading week. Stay safe out there, and I'll be back with you soon for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.